stop what you're doing right now. If you are 65 years or older, or if you have a parent, a spouse, a grandparent who is 65 or older, what I'm about to tell you could put thousands of dollars back in your pocket. Congress just passed a brand new $6,000 tax bonus specifically for seniors. And here's the shocking part. Most seniors have no idea this exists. In fact, right now, millions of Americans who qualify for this money are not claiming it. That means they're leaving thousands of dollars on the table, money that is legally theirs, money they have already earned the right to keep simply by virtue of their age and how this new law was written. Today, I'm going to break this down for you in plain English. No confusing tax jargon, no complicated forms, just exactly what this is, who qualifies and how you claim it. So stay with me, because this could be one of the most important videos you watch this year. And I genuinely mean that, because the number of people who are going to file their taxes in the coming months and simply miss this is going to be staggering. Welcome back. If you're new here, this channel is dedicated to making sure seniors like you never miss out on money that's rightfully yours. That's the whole mission here. Not flashy investment tips, not complicated strategies you need a finance degree to understand. Just making sure the money that the government already says belongs to you actually ends up in your pocket instead of sitting unclaimed in some federal ledger. Today we're talking about something called the Senior Enhanced Deduction, part of the One Big Beautiful Bill that President Trump signed into law. Now I know when politicians pass a big sweeping bill like this, most of us tune out immediately. We assume it's full of corporate giveaways and provisions that don't touch our everyday lives. We think, that doesn't affect me, that's for someone else, that's Washington doing its thing. But this one is different because buried inside this massive piece of legislation is a $6,000 gift specifically for you. Not a loan, not a credit you have to pay back, a deduction that lowers what the IRS can tax in the first place. And if you're married, you and your spouse could claim up to $12,000 together. Let me explain exactly how this works piece by piece, so by the end of this video you know precisely where you stand. So first, what exactly is this $6,000 deduction? Here's the simple version, stripped of all the legal language. Normally, when you file your taxes, the government allows you to reduce your taxable income through something called the standard deduction. Everyone gets this. It's the baseline amount of income the IRS agrees not to tax at all. For seniors 65 and older, that standard deduction is already a little higher than what younger taxpayers get. Because the tax code has always recognized that older Americans often live on fixed incomes and deserve a bit of extra breathing room. But thanks to the One Big Beautiful Bill, Congress just added an entirely new layer on top of that existing structure. An extra $6,000 bonus deduction. So walk through the layers with me. You get your regular standard deduction, the one every taxpayer receives. Then you get your existing additional senior deduction, the one that's already been in place for years. And now, stacked right on top of both of those, you get this brand new $6,000 bonus. That's 3 separate layers of deductions, stacking on top of each other, each one shrinking the amount of income the government is allowed to tax. Let me give you a real example. So this actually clicks instead of just sounding like abstract tax theory. Let's say you're 72 years old, filing single, and your total income, meaning your Social Security plus a small pension, comes to $70,000 a year. Before this bill passed, your total deductions might have landed somewhere around $17,000. That's the standard deduction plus the existing senior add-on. But now with this new $6,000 bonus stacked on top, your total deductions jump to roughly $23,750. Think about what that actually means in practice. The IRS is now only taxing you on $46,250 of income instead of the full $70,000. Do you see how powerful that shift is? Less taxable income equals less tax owed? Full stop. And for many seniors in similar situations, the single change could mean paying hundreds, sometimes even thousands of dollars less on your next tax return, just because of one deduction that most people have never even heard of. Now, who exactly qualifies for this $6,000 bonus? Let me give you the 3 simple rules, and I want you to really lock these in because if you meet all 3, this money belongs to you. Rule number 1, you must be 65 or older. Specifically, you need to be 65 by December 31st, 2025. If your birthday falls on January 1st, 2026 or later, unfortunately you'll have to wait until next year's tax filing to claim it. But if you turn 65 anytime in 2025 or any year before that, you qualify under this rule, full stop. Rule number 2, your income must fall under a certain limit, and this is where a lot of seniors get confused, so please pay close attention here. If you file as a single individual, your modified adjusted gross income, what's called your MAGI, must be under $75,000 to receive the full $6,000 deduction. If you're married filing jointly, your combined household income must be under $150,000 to receive the full $12,000 for both spouses. Now what if your income happens to sit a little above those limits? Don't panic. And don't assume you're locked out entirely. You don't just lose the whole benefit overnight. This deduction phases out gradually rather than disappearing in one cliff edge moment. For every dollar you earn above the limit, the deduction reduces by 6 cents. So even if you're earning $80,000 or $85,000 as a single filer, you may very well still qualify for a partial deduction, just a smaller one than the full $6,000. It phases out completely, meaning it disappears entirely, once you're single and earning over $175,000 or married and earning over $250,000. Which means, when you really sit back and look at the numbers, the vast majority of seniors in this country fall comfortably within range. This applies to far more people than most realize. Rule number 3, you must have a social security number. This one's simple, no complications here. You need to provide a valid social security number on your tax return in order to claim this. No social security number, no deduction. That's the rule as written. So that's it. 3 rules total: 65 or older, income under the threshold, or partially under it through the phase out, and a social security number on file. If you check those 3 boxes, you are eligible for up to $6,000 in extra tax deductions, money that directly reduces what you owe. Now here is where I need you to really pay attention, because this is the part that could cost you everything if you miss it. This deduction is not automatic. I want to repeat that because it's the single most important sentence in this entire video. The IRS will not automatically apply this to your tax return on your behalf. You have to claim it yourself, actively by name. And here's the uncomfortable truth behind why this matters so much. Because this provision is so new, a lot of tax preparers, and yes, even some accountants who have been doing this for decades, simply don't know about it yet. I've personally heard from seniors who went to their regular tax preparer, someone they have trusted for years, someone who has done their taxes reliably every single season, and that person filed their return without ever claiming this deduction, not out of negligence exactly, just because the law is brand new, and not every preparer has caught up to it yet. That's thousands of dollars gone, quietly, with nobody flagging it. So what do you actually do about this? When you file your 2025 tax return, which most of you will be filing in early 2026, you need to specifically look for the Senior Enhanced Deduction on your IRS Form 1040. If you use a tax preparer, ask them directly by name. Are you including the new $6,000 senior deduction from the One Big Beautiful Bill? If they look back at you with a blank or confused expression, that's a red flag, and frankly, it might be time to find a new tax preparer, because this is exactly the kind of detail a competent professional should already be tracking. If you use TurboTax, H&R Block, or any major tax software, those platforms should be updating their systems to include this deduction as a standard option, but you should always double check rather than assume. And one more critical detail, this deduction is available for tax years 2025 through 2028. That means you have a 4-year window to take advantage of it. But 2025 is already happening right now, already in progress, and if you miss claiming it for this tax year, you cannot simply go back later and easily recover that money, which is exactly why this is urgent and time sensitive, not something to file away as a someday task. Now let me talk directly to the married couples watching this video, because your situation is actually even better than the single filer scenario. If both you and your spouse are 65 or older, you can each independently claim $6,000. That's $12,000 total in extra deductions for your household combined. Think about what that actually represents. A married couple with a combined income of $90,000, both partners over 65, could potentially reduce their taxable income by a full $12,000. Depending on your specific tax bracket, that could save you anywhere from $1,200 to over $2,000 in actual taxes owed. That is real money. Money you could use for bills, for helping your grandkids, for healthcare expenses, for whatever matters most to your family. Your choice entirely, not the government's. And here's one more detail that a lot of couples miss. Even if only one spouse is 65 or older, that individual spouse can still claim their personal $6,000 on their own. So don't make the mistake of assuming your household doesn't qualify at all just because one of you happens to be younger. Check each person's eligibility separately, because the rule applies per individual, not just per household. Alright, so how do you actually go about claiming this money? Let me walk you through it step by step, plainly, so there's no confusion when you sit down to file. Step 1. Check your age. Are you 65 or older as of December 31st, 2025? If yes, good. Move to Step 2. Step 2. Check your income. Get a rough, honest idea of your total income for 2025. That includes Social Security. Yes, Social Security absolutely counts toward this calculation. It also includes pension income, investment income, and any part-time work earnings. If your total lands under $75,000 as a single filer, or under $150,000 as a married couple, you likely qualify for the full $6,000 or $12,000 combined. Step 3. Tell your tax preparer directly. When you sit down with whoever prepares your taxes, hand them a written note that says exactly this. I want to claim the Senior Enhanced Deduction, the $6,000 bonus from the One Big Beautiful Bill. Don't assume they already know about it. Tell them directly, in writing if possible, so there's no ambiguity later. Step 4. If you prepare your own taxes using software like TurboTax or H&R Block Online, look specifically for the deduction section within the program. There should be a dedicated field for the senior enhanced deduction. If you don't see it clearly labeled, don't just shrug and move on. Call their customer support line and ask directly whether the platform has it built in yet. Step 5. Keep good records throughout the year. Keep a simple, organized record of your income sources, your social security statements, your pension letters, your bank statements. This makes it dramatically easier for your preparer to confirm your magi accurately and ensures you get every single dollar you're rightfully owed, without any guesswork or misdocumentation slowing things down. That's it. 5 straightforward steps, and potentially thousands of dollars back in your pocket as a direct result. Let me give you 2 real-world examples so all of this clicks into place concretely. Example 1. Margaret, age 70, filing single. Margaret receives $18,000 a year in Social Security and $30,000 from a small pension. Her total income comes out to $48,000, well under the $75,000 threshold for single filers. So Margaret qualifies for the full $6,000 deduction on top of everything else she was already claiming. The result, her taxable income drops significantly, and she could realistically save somewhere between $600 and $900 on her tax bill this year alone, just from this one provision she previously knew nothing about. Example 2. Bob and Linda, both age 68, married filing jointly. Combined, they bring in $110,000 a year between Social Security, Bob's part-time consulting work, and Linda's pension. They fall comfortably under the $150,000 threshold for married couples. So both Bob and Linda each independently claim their own $6,000, for a total of $12,000 in new combined deductions. Depending on their specific tax bracket, they could save anywhere from $1,400 to $2,000 in taxes owed. That's a vacation. That's a medical bill paid off in full. That's money that stays in their family's hands, not the government's, simply because they knew to ask for it. Here's the bottom line on all of this. Congress passed this $6,000 senior bonus specifically for you, not for corporations, not for billionaires, not for some abstract category of taxpayer. For everyday seniors who worked their whole lives, paid into the system for decades, and deserve to keep more of what they earned. But, and I cannot stress this enough, you have to claim it yourself. Right? It will not show up automatically on your return, no matter how long you've been filing with the same preparer or the same software. You have to ask for it by name every single time, for every tax year it applies to. So before you file your 2025 taxes, do something with this information right now. Print this out, write it down on a sticky note, tell your spouse, tell your kids, say it out loud if you have to. I want the $6,000 senior enhanced deduction from the One Big Beautiful Bill. This is available from 2025 through 2028, so you do have a window, but that window is already open and already running, ticking forward, whether you act on it or not. Don't let this money slip quietly away simply because nobody told you it existed. If this video helped you, please share it with every senior you know, your neighbor, your sister, your parents, because right now, millions of people who absolutely deserve this money have no idea it even exists. You can be the person who changes that for someone in your life. Hit the like button, subscribe for more videos just like this one, and I will see you in the next one.